I'm not looking at any economic readings. I didn't give a toss about the Reserve Bank. I guess if they cut interest rates, I would have, but I didn't think they would. But I think that the only data we economists and people in the financial markets care about at the moment are infection rates, number one, then death rates. Unfortunately, death rates are really low in this country. That's fantastic news. But the third issue I think we care about is how long will these measures, closures and lockdowns and social distancing, how long will they last for? Because that's going to have a very big impact not only on the way we live and our businesses perform. Because remember, a stock price is a reflection of the profit of a company. And all these businesses that aren't operating, their profits going forward are going to be affected. Now, if the exit period from closures is short, say for example, the lead given from the Rugby League, namely they could start in June 1, if that's a suggestion that from June 1 to maybe July to August, progressively those closures and lockdowns are reduced, well then business would be happy. That would be good for future profits, because remember there's a 6-month call out there. So, but if it goes on for a longer period of time, Laura, then profits will be written down and stock prices will fall again, and we might see another leg down for the stock market, which is something a lot of investors wouldn't want, retirees wouldn't want, who are exposed to the stock market.
So reading the stock market at the moment is a little bit like reading a crystal ball. What you're saying, I think, is that what matters is when we start to see the exit strategy and what happens to stocks when we start to come out of this haze.
Yep, exactly right. See, when the market fell about 35, 36%, that was when we knew nothing. It was just pure fear, and quickly people wanted to get out and get to cash. But then the government put the stimulus packages in, the Reserve Bank, other central banks started kicking in. And so we rose, 16 or 17%. And what we're hoping is that that's created a bit of like a safety net under the market. And that's why we've had some nice rises in the stock market. But if the news gets worse in terms of infection and death rates, and then the period before we exit is extended, say, to 6 months, which a lot of politicians have mentioned, that would really, I think, spook the stock market when we'd see another leg down.
Interesting. We're seeing APRA perhaps make a decision on whether banks should pay dividends or pay them in their entirety. Yeah. What are you picking up here?
Yeah, I think APRA will tell them to reduce their dividends. Okay. They won't do what the European banks were told, no dividends. And that's going to be another terrible thing for retirees, because retirees, have moved towards dividends for their retirement. And also if they own, say, shops or their landlords for properties, they may well be told that their tenants can't pay their rent. So this is going to be really difficult. Our banks are amongst the safest in the world nowadays. And so I think it'll be reduced dividends. And also they'll do what we call discounted dividend reinvestment plans, which most normal people don't understand, Laura. But basically it's telling you can get a dividend and it's going to be reduced, but you can take it as more shares and we'll sell them to you at a discounted price. That's what a dividend reinvestment plan is all about. APRA might allow banks to do that so people can hold more shares, but it will reduce the overall share price.
Right. Do you have any good news for self-funded retirees this morning? Because they're taking a hit on many levels, dividends being one, perhaps with the property market as well, needing to give tenants a reduction in rent. What do you think? Should there be another plan here, a temporary plan from Josh Frydenberg?
Yeah, I think he's going to have to look at it. Seriously, there are pensioners retirees who should be allowed to access the pension while this, strange period, extraordinary period, as Josh would call it, while that's going on. Some retirees don't need it, but some retirees would clearly need some kind of cash support, like the job seeker and the job keeper plans for employees. And I think access to a pension until things return to normalcy would be a reasonable suggestion. I'm sure the government will be thinking about that right now.